Hello and welcome. This is BQ Prime. You're watching Diwali Bets for Samvat 2080. I am Agam Vakil.
And I am Hiral Bhatia. Clearly, lots to watch out for in terms of Samvat 2080 with the kind of stars that we have been picking up as well. In fact, everyone's watching out for which are the stocks one should be betting big on. Let's welcome in our guests for the day who will be sharing their top picks for Samvat 2080. Joining us is Deven R Choksey. We have Sudip Bandyopadhyay as well as Chakri Lokapriya. Welcome to the show, gentlemen. Let's welcome in our first guest for the show. Deven R Choksey joins in with his picks. Deven, firstly, wishing you a happy Diwali and a prosperous New Year.
Thank you, Hiral and Agam. Wish you all happy Diwali and prosperous New Year as well, and to all your viewers, good wishes for Diwali and festivities.
Thank you so much. Deven, firstly, let's start with the financial space. Clearly, a lot of conviction, and in fact, the banking names is one of the heavyweights with regards to where Nifty goes. What's the sense that you pick up for the next 1 year? What would your top picks be?
So, having seen the progress with the economy, where we are heading in the direction of around $10 to $12 trillion economy by 2035, from current $3.7 trillion, I would think that financials will continue to have the larger role to play. And given that situation, I would think that the well-capitalized companies and having the larger amount of ability to corner the better market share, one among them would be Geo Financial Services. They have basically four different business models, or the verticals rather. The first vertical would be definitely the banking vertical, the NBFC vertical. The second vertical is the asset management vertical. The third vertical is the insurance vertical, and the fourth vertical is the wealth product distribution vertical. Now, if you look at the lending vertical out here on a 1,40,000 crore net worth balance sheet, they would have obviously, I think, the AUM book, which they start with around 7 lakh crore, 8 lakh crore. And I think that is where probably I think they would be capturing the larger part of the business. Total addressable market size of the merchants, I think, which they are basically serving and Geo retail Reliance retail platform is close to around 50 lakh crores. On that, I think if they start with a balance sheet net worth of around 1,40,000 crore, which can possibly allow them to expand the lending book to 7-8 lakh crore. That is, I think, a distinctly important proposition where the company can possibly start the business clocking faster revenue. You look at, I think, the retail lending, again, I think the retail finance, which is provided to the end consumer, B2C consumer, the customers which are there on Reliance Retail's platform, getting into 18,000 stores of Reliance Retail. I guess I think they become the first prime target. What is more important, on one side you have the balance sheet, on other side you have the customers. You don't have to basically, I think you just have to execute the transaction. And that is where I think this company can possibly surprise many by way of recording the highest level of AUM book in the shortest period of time. So we like this company.
Well, on that note, let's also get in Chakri Lokapriya. He is the Managing Director and CIO at TCG Asset Management. Chakri, firstly, welcome. Thanks for joining in. Very happy Diwali to you as well as a prosperous New Year.
Thank you so much, and wishing you a happy Diwali too.
Right, Chakri. So my first question to you is also to do with the financial sector. But in this case, you are focusing specifically on two finance majors to do with the power sector. Can you take us through why you like PFC and REC?
Indeed, if India is going through a power renaissance in the sense that, if you rewind back to the first boom of the power cycle, this was in 2006, 5, 4, 6. At that time, REC and Power Finance were also the leading financiers. They financed a number of thermal power companies, and there were lots of regulation changes, etc. And the whole sector went through a good amount of problems. A lot of the regulations have been ironed out, and now there is a renewed push towards green energy, and financing of green energy is going to be a bigger thing than thermal. And with India now that needs to sign the treaty, the Environment Treaty, this is 2070. So which means to meet India's growing power needs is both thermal and coal, and also the infrastructure needs, whether it is the roads, bridges, dams, etc. And Power Finance and REC today are empowered to finance both these types infrastructure as well as power related. And these being Navratna companies, and having a very good experience, are attractively priced. They're priced under 0.7, 0.8 times book value, and their loan size is going to grow dramatically over the next many years. And in many cases, the end customers that they lend to are quasi-government or government-related bodies, so the risk of NPAs is also low. And therefore, if you're putting it all together in this huge transition to green energy, as well as the renewed thrust on thermal energy, Power Finance and REC are extremely well positioned and are attractively valued at current levels.
Let's now welcome in Sudip Bandyopadhyay as well to understand what he is betting big on. Sudip, firstly, wishing you, your team and your family a happy Diwali and a prosperous new year.
Thank you. Wish you and the entire BQ Prime team and all your viewers a very happy and prosperous Diwali and a new Samvat.
Thank you. So, Deep, let's start off with the overall consumption theme now as well, because clearly Diwali being a festivity where we talk about consumption as a space, how are you looking at it and what would your topic be in this space?
Well, I think if you have to look at consumption, the one thing which is really flying, I would say, is the gold. And if you talk about gold, obviously we have to talk about the branded jewelers, listed branded jewelers. Not that there are too many. Of course, we all know about Titan. The other company which we like quite a bit because of what they're doing on ground is Kalyan Jewelers. Fantastic expansion strategy. They've been expanding rapidly through franchise route. And through the franchisee route, expansion makes it capital light as far as they are concerned. They are also strategically venturing in a big way in the northern market, which is higher margin. Also strategically calibrated expansion in Middle East is happening again through franchise route. Now, all this will help them, enhance their margins significantly and also return on equity in a significant manner. Of course, they have a very well diversified product basket catering to multiple segments. And of course, there is a shift happening from unbranded to branded jewelry, and that Kalyan is a big beneficiary of. So, considering everything, I think Kalyan is definitely is a good pick at current levels. We have a target of about 390 to 400 in about a year's time, and I think investors will do good to participate in this this consumption uptrend which we are seeing in branded jewelry.
Right, Deven, we shift focus to another sector in which you have a couple of picks here as well, the auto and the auto ancillary space. In this case, what are the ideas that are standing out for you for this Samvat?
So Tata Motors looks, I think, interestingly positioned now. I think if you look back into recent past, I think they've corrected the most of the cost inefficiencies that they were having in the balance sheets. They are also generating now the cash profits in different verticals, different segments, including in JLR. We believe that I think passenger vehicle vertical domestic portfolio, passenger vehicle vertical JLR portfolio, commercial vehicle vertical, I think with the scrappage policy coming into force, is basically suggesting that this company could have next 10 years of higher visibility as far as the business is concerned. Because on one side, passenger vehicle portfolio is transiting from ICE to electric vehicles and to the autonomous vehicle in case of JLR. On the other side, commercial vehicle portfolio is successfully being moved ahead because of the scrappage policy coming in, higher amount of capex demand in the economy due to the infrastructure spending, and also the new industries coming up, including the PLI segment under which government is encouraging more investment. So Tata Motors look, I think, directionally a very strong company. Given the fact that I think the cost economics have started working in their favor, I would think that this company should be considered for investing into the portfolios.
Right. So, Deven, that's a Tata Motors from the large cap space. Anything from the auto ancillary space that comes to your radar that could be a good investment bet to actually come and supplement the auto space?
excellent opportunities are there in few companies in auto ancillaries, and one of them I think which we closely track is a company called Minda. I think this is one company which has possibly got a portfolio which is applicable across the IC engine vehicles as well as the electric vehicles. They have a complete ADAS system. They have aluminum alloy wheels. They have lighting division. They have horn division. They have seating divisions, and they also have, I think, in the infotainment segment within the dashboard management, they have got, I think, the complete ADAS system in place. So this particular company looks, I think, really interesting. In the past, I think this company has produced a significantly large amount of growth by consolidating various companies into it, in the portfolios into it. Now they are actually increasing on a per vehicle basis, I think, the size of the kit that they are supplying to the customer. The likes of Maruti, the likes of Tata Motors, the likes of Honda, Hyundai. I think these are some of the customers which they have, where the kit value is basically increasing because of the variety of product proposition that they have. And we believe that, I think, again, it's a structurally a good call, because one, you have a well capitalized balance sheet, duly approved products in the portfolio. And at the same time, I think your customer is growing and growing faster. So obviously, I think these are all some of the unbeatable combinations where directionally you can look into this company from investment point of view for a longer period of time.
Let's take this conversation forward, and that has, of course, not only been a lot of talk, but a lot of work from a lot of these auto companies when it comes to the electric vehicle space. Sudip, I believe you also have a pick in this segment. Can you take us through that?
Well, definitely I have a pick, and I have been maintaining the view, Agam, that we instead of looking at automobile, probably we should look at auto ancillary. The reason is simple. There is too much of flux as far as the automobile companies are concerned. Yeah, they're introducing EVs, and they're in the process of introducing EVs, and so on and so forth. But you don't know which brand and which company will succeed as far as their EV is concerned. It's too new a segment to really comment. There is a lot of excitement, but we don't know who's going to be the winner. So under the circumstances, I prefer investors play this space through auto ancillary, because fundamentally auto ancillary companies will play a big role in this entire change from IC to EV. And in that process, per car component of the auto ancillary companies will increase, and this again helps auto ancillary, and they are reasonably insulated from the market vagaries, predominantly because of the fact that irrespective of who wins, a good auto ancillary company probably will be the OEM to all of them. Now, Sona BLW is my choice here. They have been rapidly, customizing and moving their production chain and production towards catering to the EV segment. They have got very good traction and order book. They are gaining traction both in India and international markets. So considering the significant tailwind and the performance which they are demonstrating in the market quarter on quarter, I think I will like to go with a company like Sona BLW as far as this EV transition is concerned. We have a target of 700 for 1 year, and investors will do good to buy this at current levels.
We have been talking about infrastructure as a space as well. Clearly, we've spoken about building materials, etc. Infrastructure as a theme ahead of elections is also absolutely in favor. What's the sense that you pick up on this space, and what would your top bets be if you have to look at cement as a sector, because that has been slightly cyclical? Again, lots of variety that we're seeing there, because you have the smaller players which are being taken over by larger players, and that's the game that's being played there. How are you looking at the cement space, and what would your top picks be?
Both with the coming up of elections and as well as coming out of COVID, there was a huge thrust on infrastructure spend. And meanwhile, the interest rates shot up, because of global reasons, inflation, supply chain problems. And as a result, private capital expenditure in the country and around the world slowed down dramatically. Fortunately, India government actually stepped up both at the central level and at state level. And in fact, for this fiscal, something like close to 10 lakh crores is going to be spent by the central government, and state government spends are also up anywhere between 30 to 50% depending upon the state. So this is a very big employment generator. Anyway, India needs that infrastructure. And for all that infrastructure, clearly cement is a very vital component. Companies, right, whether it is the Frontline Ultratech, which is nationwide, or more regional companies like JK Lakshmi or Dalmia Bharat, these companies are extremely well positioned because A, their raw material costs are coming down and have come down quite dramatically. And B, the volume is picked up. They're up about anywhere between 15 to 25% depending upon the company. And C is the pricing power. Now, that's something which the sector has been lacking, but they're making up on strong volumes. I think with the return of some amount of pricing power, these stocks are very attractively valued.
Deven, you also have an idea from the small cap space in the hospitality sector. Can you take us through that?
Yeah, this is an interesting company where we believe that I think the larger amount of leisure travel is going to be the order of the day now, because most of the consumers are having money in the pocket to spend. And India as a country has knowingly, unknowingly, I think, created a significant amount of travel mechanism in the country, the spiritual travel as well as leisure travel. This company is called Praveg, Praveg. I think this company is recently listed, I think, in the stock exchange in BSE. They operate, I think, very easy to understand business model. It is. They operate the tent cities. The tent cities which are in Run of Kutch, now in Dholavira, which is a World Heritage Site. They have tent cities in Statue of Unity, in Varanasi, now in Ram Janmabhoomi Mandir at Ayodhya, and several other locations, including Jawai and Rajasthan and other places. I think this company is systematically building, I think, the tents, the luxurious tents, which attracts most of the travelers into to enjoy their experiences. We believe that I think this is a beginning of their particular process or this path, I think, which they have adopted, wherein the luxurious tents are being offered at a price which are at a premium compared to hotel rooms. And that is where I think they are basically extremely successful with the business model. If a hotel room takes about 1 crore of rupees to get the capex done, this luxurious tent I think would get capex done at 10 lakhs of rupees. And it is this equation which allows them to have a faster payback period of between 1.5 to 2 years time on the revenue front. So we like this company from a perspective that I think this year they might conclude the year with around 12 locations. And next year, I think that may be probably, I think, doubling to the 25 locations. The size of the company is relatively small. It is sub 1500 crore market cap company, which we believe, I think, has a potential to go a long way in the business.
Sudip, overall, you have construction, infrastructure, real estate. This has been a space that has been buzzing. Ahead of elections as well, all eyes are with regards to what happens in terms of infrastructure as a space. Building material becomes one of the focus areas as well on this one. Where would your bets be if you have to look at this segment as a whole?
Well, Hiral, there are multiple companies which are doing good here. And I strongly believe that this is one segment where there is a significant tailwind, considering the infrastructure, housing, and construction boom which India is witnessing. And if India's GDP is going to grow at around between 7 to 8% year on year, I think this is one segment which will do very well. Now, because we have to shortlist here, I think I will talk about a company which has not come in the limelight so much. This is the flagship company of the Welspun Group, Welspun Corp. Now, this company is the leader or among the top three as far as line pipe are concerned. They are definitely amongst top three in India. They have about 23% market share in this similar space in US. And they're also a dominant player in Saudi Arabia, where again construction activity is at happening at frantic pace. So overall, I think this is a very good position they are in these three markets. Now, remember the tailwind is there in all the three markets. There is also multiple other factors which are aiding them. They have, vertically integrated their production, which is helping them. Now, the biggest and unknown quantity X factor as far as this company is concerned, they acquired Syntex. Now, Syntex has about 9% market share in its segment. I think with revamping of distribution and more penetration, I think Welspun Corp will get a significant leg up through the Syntex business. Also, remember, they have a building material related business, which is TMT. Now, this TMT again is in a big demand, whether it's the Gati Shakti project of Government of India or the Housing for All and multiple other construction businesses. TMT is in big demand, and this is one segment which is not that well known and publicized of Welspun Corp, which will benefit in a big way in the coming years. We have a target of about 600 for a 1-year hold. And investors should do well entering into Welspun Corporation at current level. Prices have moved up in the last about a month's time, but still, I think there is a lot more, upside left here.
And Chakri, of course, we also have tremendous gains for something like a Titagarh wagon, which not only has been part of the rally that the railway stocks have seen, but Titagarh wagons, or rather Titagarh rail systems as it is called now, has seen a considerable upmove of its own. It's still your top bet. Can you elaborate a little more on this one?
Traditionally, if you looked at railway companies once in a year during budget time, they would come and go out of labor. But now what is happening is, with the Vande Bharat, there is clearly a huge amount of government push in renewing the whole Indian railway system, and you're actually seeing work happening on the ground. Second, this is a revenue stream which never existed in the past, which is the metros, with them developing the wagons for the metro. So, and the whole country, when you travel across the country, it's amazing the amount of metro work that's happening in tier 1, 2, 3, 4, 5 level of cities. And 3, export revenues. Export revenues to some of the smaller countries which never existed in the past. For these companies, for the entire railway sector, there's something which is happening now. Now, against all this, so which means order book is not the problem. Again, in this case, the payments are made, rather the end customers, again, either the government or quasi-government. So which means the payments are not at risk. It can be a lengthy working capital cycle. Yes, there can be a mismatch of quarters, but it's only a delay. And therefore, with the huge order book, I think there's revenue visibility. So even now, trading at about 23, 24 times, with an order book that is secured next 5-7 years, I think it's very attractively looked fundamentally.
There you guys have it. Those are your top bets for Samvat 2080. Well, I want to take this time to thank Deven, Chakri, as well as Sudip for taking us through all their top bets for the upcoming year.
Absolutely. In fact, that's a wrap from Agam and myself. Wishing all the viewers a happy Diwali and a prosperous New Year.